The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. Well, our first request was for Tesla, and I posted the daily chart of Tesla in the Tiger TV, and you'll be able to see that it is completing a double top pattern, much like the same pattern that Basil was talking about. I'm looking at this area around 161 to 162, and but that's a stock that most people are not involved in. Who knows where it's going to go. I've actually driven the car. I wouldn't buy one, but that's me. I just realized 2 weeks ago the color TVs were here to stay, so I'm a very poor judge of character on some of these things. The judgment on microwave ovens is still out, but color TVs are definitely here to stay. I think computers are still out there as possible, being able to stay, but I'm not sure. That was one of the things on my bucket list, folks. I know it'll never happen, but one of the things on my bucket list was for it to go 3 days without me having computer problems. I can make it through 1 day, I can make it through 2 days, but boy, I certainly can't make it to 3 days. So we'll see. I don't know. We've gone through so much in the last 25 years of technical stuff. It's just absolutely, totally amazes me. I watch the History Channel and I see the inventions that have happened, through the years, and it's really, really amazing what's really happened. What I want to do now, we're at such a critical level in these markets. I wanted to go over why we hit such an important bottom this past week. The first one we're going to take a look at is the New York Stock Exchange Index. We made a perfect 61% retracement off of the low that we made on April the 15th. We made that butterfly the three drive to a top pattern up there, followed by the Gartley pattern. Then we came down and stopped exactly at the 61% retracement. So far today, we've already, in just 2 days, we've made a 38% retracement of the whole move down. Now, usually rallies that occur after the market's been down 8 or 9 days in a row will rally back anywhere from 3 to 5 days. So that's what we're looking for, is a 3 to 5 day rally in this to see what's going to happen. So that was one of the things that told us that the market was really getting ready to have a pretty good rally. Now, if we take a look at another thing that people watch all the time, at least most technicians do, and that is the cash S&P 500. We also made a 61% retracement down at that 190 level. That was also a 382 retracement off of the April 15th low. So on the overall stock market, the New York Stock Exchange Index was making a 61% retracement, whereas the S&P was only making a 38% retracement. That means in order to do the same thing, the S&P would have had to come down to the 187 level and only got to the 190 level. So that's a huge difference. So the market is a lot stronger than you'd like to realize, but that's what we're looking at. And so far, just in 2 days, the S&P cash has rallied to the 50% level, whereas their overall stock market, the NYSE, has only made it to the 382 so far today. But it's still early. It can go a lot higher, it can go a lot lower, do anything it wants. But the important thing on this cash S&P chart that I think deserves our attention is the April correction that we had that went from 2 weeks from late March into the second week of April. That amount of correction was exactly what we had happen between the high we made on July 23rd and to where we were coming in on August the 6th. So all of that tells us that we've had some really strong symmetry. That sets up a very powerful parallel channel line. That means to me that should we go below the lows we made last week, that's going going to be a very, very negative thing to happen. But we need to see how much the market is going to rally from this level, and that will give us a really good indication of what we're looking at to see what the next leg is going to be. Because we left a gap today, the market's still quite strong. And all I know is that we go below that low of last week after this rally, that is going to be very, very negative if, in fact, it ever does that. But that's neither here nor there. We have to find out where we are right now. And the way to do that is to look at some of these things and tells us where we are. Now, the VIX index was another one was right at. Okay, folks, sorry for the interruption, but this is monsoon season here in Tucson, Arizona, and we get flashes of electrical storms. There's more lightning flashes in Tucson than any other place in the United States during these 4 months from June through September, and I think that's what the problem was. I had the problem all weekend long. It knocked out one of my computers, and I have a generator to protect me against that stuff, and it still doesn't protect it too much. In fact, my house has been hit in the last 20 years since I bought the place. It's been hit 3 times with lightning, twice rather minor, and once it knocked out the whole air conditioning and electrical unit. And luckily it was, covered by insurance, but anyway, that's neither here nor there. Let's forget about that. Let's go back to the VIX index. We're pulling back to, I believe, around to 13 in the VIX index. That's what I think is going to happen, and we'll see what's happening. Overall, the market still looks very bearish, but we stopped exactly at major, major support, as we've been talking about here today. It's just spot on. The thing that is still very interesting to me is the fact that the Bradley model, which has been doing very well since July 3rd, is in vogue. I mean, this market has been very, very oversold. We're correcting that now. And we're also correcting it in the DAX, in the German stock market. The German stock market took out the I believe the February lows by just a little bit. They made a double bottom, and they're rallying back today too. That's where the rally started on early Friday morning, late Thursday night, was when the DAX made a 3 drive to a bottom pattern. And then it turned, which was also a double bottom, and now we're having a pretty good rally from that level. But we really need to see the market, continue the rally. And it shouldn't go straight up. It should have some backing and filling here. I mean, we left a gap up this morning. We might come down and fill this gap, but we should chop around with a bias to the upside here for the next 3 to 5 days. But if we go below the low we made last week, that's going to be a really nasty thing, because this means it can only rally 2 days to a 382 retracement in the New York Stock Exchange Index, which is the real stock exchange. That's the major issues. Over 2,000 of them highly rated, most heavily traded stocks in the world. There's also some foreign stocks in there, as opposed to the S&P, which is only 500 stocks. But that's what we're looking at. Of course, the NASDAQ, it could hardly correct at all. It couldn't even make a 382 retracement of the low we made just last month. So the market is still in a bullish phase, but it's getting ready to roll over, in my opinion. This might be the rally that brings them, one of the days where we're going to have at least a 500 or 600 point down move in one day in the Dow, and that's really not very much on a percentage basis. That's only about 3%. And when you stop and think that we've had days of 7 or 8%, the 500 or 600 points, is not that much. But we'll wait and see if that in fact does really unfold. So those are the main things that we've looked at. The New York Stock Exchange Index stopped exactly at the 61% retracement. The VIX stopped exactly at the 61% retracement, and the S&P stopped at the 61% retracement. And then there's one other that we need to look at it's all related to this, and that is the Treasury note chart. We're going to take a look at that right here. You'll just give me 1 second here, and I'll get it up. And you'll see that the Treasury notes completed a beautiful Gartley pattern up here, and has now started to back off somewhat. And remember, this market has lower tops all the way, so this is still a very bearish market, i.e. higher interest rates. I know the Federal Reserve is telling us that we're looking at lower interest rates, but the market is telling us something altogether different. And so we'll have to see how history is going to unfold this. But the notes got up to that 126 level, which was a 786 retracement. And we got to take a little break here. The Dow's up quite a bit, gold down a few dollars.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. We have a question from one of our listeners about the supermoon, the super full moon that we had on the 10th, which was yesterday. A super moon, either a full moon or a new moon, is based on whether the Earth is closest to the Earth, called perigee, to the moon. The Earth and the moon is called perigee, and when the Earth is farthest away from the moon, it is called apogee, and we are at perigee right now, where the Earth is the closest. Now, it starts to pull away today and goes out for 14 days until we come to the new moon, which will come in on the 24th, and that will be at apogee when it's as farthest away. What's truly amazing about this, folks, is that Pythagoras had this all figured out in 663 BC. That was a couple thousand years before Columbus realized that the Earth was not flat on his trip, to the New World. But Pythagoras was one smart dude. His Pythagorean theorem, a squared plus b squared plus c squared, is basically the whole structure of how the universe is constructed, with the ratios of the triangle, and which are also related to the Fibonacci numbers and the hypotenuse of those angles. And it's amazing how they work with charts, but they don't work with charts all the time. They only work part of the time, but they're far better than most of the things that you can use when you're looking at it. It's certainly better than a Ouija board or tea leaves, but we'll have to wait and see how the tea leaves are coming out. Now, I wanted to mention I had a interesting phone call yesterday. Someone called me, and we were chatting about the markets and stuff. And he happened to mention that he was in the armed services. I asked him what part he was in. He was in the Navy, and he happened to be a Navy SEAL. And I've only talked to 2 or 3 of these guys because they're so rare. And so we chatted for quite a while, and we chatted about their motto. And their motto is, live fast, love hard, die young, and make a good-looking corpse. And I told him, I said, do you know where that motto came from? And he said, no. He said, it's been with the Navy SEALs, since we started in '62. And I said, no. I said, that actually comes from a movie called Knock on Any Door by John Garfield. I've used that motto many, many times in the past, not knowing it was, for the Navy SEALs, but that's where it actually came from, was an old movie from, I believe, 1947. So we chatted a little bit about the movies and trading places and stuff, so it was really quite interesting. Now, I want to show you one of the most amazing charts. I did this on the Commodity Show on Thursday, and I'm going to show it to you again because it is the price of silver versus the price of gold. And as you can see, silver is in a tremendous bear market going back the last 6 or 7 weeks. We've dropped well over 10%. The market has failed to rally. When gold rallied and took out the highs of early August, we couldn't even make higher highs in the previous days in silver. Folks, that's a really bearish indication. I know you have to look at each of the charts separately when you're doing it, but silver is really in a precarious situation here, because if it gets below another 25 cents from where it is right now, it is going to be extremely bearish. But it can also hold this level, and you'll be able to see it. Now, I posted into Tiger TV the difference between the two. As you can see, gold made the 61% retracement on Friday at the $1,323 per ounce level. The high was $1,324.20. It's backed off a little bit today, but it's really much stronger than the silver, as you can see. The important thing of this silver chart is if you'll go back and look into April, when we had the same type of situation where we only made a 382 retracement in silver. It had a 2 weeks advance, and all it could do was make a 382 off of the previous 2 weeks highs. That was telling you that there was a great deal weakness coming in. And as you can see, it dropped another 10% from that level before making the double bottom, down around the $18.50 per ounce level. Silver still has a chance to be bullish as long as we can stay above the 1970, 1965 per ounce level. It still has a chance because we've been here for 5 days. It hasn't gone down, which is a good thing. The bad thing is it couldn't rally when the rest of the when the gold market did. Now, there's a reason for that, is that each of these commodities has their own cycle. That much I really believe. And maybe silver's cycle is a little different than the gold cycle this time, and it's going to take something different for it to turn around. So right now, it's having a little bit of trouble, but it still has a potential to go higher if it can hold 1970. We'll be back after the big break. The Dow is still up. The gold is down just a tad.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and I'm going to put a chart of Amazon into the Tiger TV. It's one of the most actively traded stocks. It's certainly almost everybody uses it. It's they've done a wonderful job of marketing, but the technical part of this chart is really unbelievable. Starting with the big ABCD move that took us up to the high, where we made the 3 drive to a top pattern at 410, you'll notice the ABCD moves down, and then you'll notice the reactions, how they stopped at the exact 786 and 618 of the previous moves. And then following that day, after that those corrections were made, there was some very negative news on Amazon. I don't know exactly what it was, but it gapped down and stopped at the 61% retracement for 5 days. And then it went down another 3 or 4 days and stopped exactly at the 786. Folks, these were to the exact penny, within just a couple of cents of a stock that's trading at $300. Now we're in the midst of a rally that started 8 days ago, and it'll probably take us up into the gap area somewhere around the 326 to 330 level is what it looks like, with what we're looking at with Amazon. The reason why I posted that is because I'm a really believer in technical analysis, especially pattern recognition. And when you see charts that act like this, it really brings a great deal of interest when people can see that if you practice some of this stuff, you can actually, do it yourself. And that's the real key here. Now, the next chart that we're going to look at is a commodity, but because it's very instrumental in everything in our economy, that is the price of crude oil. And as you can see, the price of crude oil is completing an ABCD pattern down at the 96.50 level. We've made a higher high than yesterday, and we haven't gone anywhere yet. But what's interesting about this chart is that if you take the high from the AB leg and measure it in time down to the B leg, the AB leg in time is exactly equal to the CD leg in time, and that comes in today. So we could make a slightly lower low here in crude oil around the 9,600 level and still be, quite bullish. So we have our eyes on the crude oil to see what we're looking at, so we'll be able to see what's happening. Okay, we got a caller from Florida. David, are you there?
Sir.
How are you, my friend?
Larry. I am well. How are you today?
I'm okay.
Got a question for you. Been following your two. Is the 3 drive to a top or 3 drive to a bottom? I was wondering if I could ask you to first take a look at the New York Composite.
Yes.
And to me, it's a very clean, very clear 3 drive to a top here recently that started in the beginning of June. Let's say we had our first top on June 9th, and then we get our second top on around June 20th, and then we got our third top on July 3rd at 11,105. And then the market made a real nice ABCD pattern on the way down. So that one's, that's pretty obvious, pretty clean, pretty clear. I was wondering if I could also, if you wouldn't mind, please, to put the E-mini on a 2-hour chart.
I can do 2-hour, but I have a 4-hour already. Would that be close enough, do you think?
Tell you what, let me see. I think it probably might even show up on a 4-hour, probably just even a little bit better.
Wait, I can do a 2-hour.
Yeah, no, 4-hour works. 4-hour works.
I had my calculator happy with me, so I'm able to do a. Now I've. Oh dear, there we go. Okay, now you're asking if that was a 3-drive to a bottom pattern that we just made in the E-mini just the other day on the.
Yes, sir. Intraday, just with the bottom coming in on Friday.
Yes, it did, because each of the bottoms, you had the perfect ABCD there. That was the key. Let me draw that ABCD in and put it in to let the folks see, because that's the real key here, because it hit it spot on. And at the same time that was happening, David, we were hitting a 3-drive to a bottom pattern in the German DAX. That was happening at about 2 in the morning. I happened to be 2 in the morning my time, which was 5 New York, because my alerts started to go off and tell me that these patterns were completing, because I had price levels down there, and I saw those coming in, so I expected we're probably going to get some type of a rally off of here, which in fact we have. But that was a 3-drive. Now the difference between the one, excuse me for talking too much, but I want to try to explain this. The difference between the New York Stock Exchange 3-drive to a top pattern that you saw and the one that we're looking at here in the New York Stock, in the S&P 4-hour chart, 2-hour chart, the difference is the NYSE is absolutely perfect. I mean, it is exact to the day. The number of days up in the AB leg are equal exactly to the number in the CD leg. Now with the S&P, the number of days are off a little bit. They're off by about, well, it's hours, but it's off by about 4 hours. But the price level was spot on. The ABCD measured to 1891, and the low was 1890. So it was pretty much spot on for that. So that was the main difference. There's a rule of thumb. The man that basically the 3-drive pattern came from Gartley's book, no question about that. But a man named William Dunnigan, back in the 50s, lived in Santa Barbara, the late 50s, early 60s, wrote 2 books, the Dunnigan One-Way Formula and the Dunnigan Thrust Method. And in part of that, what he did is he tried to describe the 3-drive pattern a little better. He didn't use Fibonacci numbers, of course. He used a little bit of ABCD, but he did describe it, and his rule of thumb was if you have to force it to see that it's a 3-drive pattern, it's not a 3-drive pattern. In other words, this literally has to jump off the page at you to tell you that that's what it's looking at.
Gotcha. It almost looks like it's a movement in either an up or down, depending on whether it's 3-drive to a top, 3-drive to a bottom, where it's a movement, sustained movement up or down, followed by a retracement, and then followed by a complete AB equals CD. Is that fairly accurate statement on my part?
That's a perfect. You said it exactly perfectly. Why don't you repeat it so everybody will try to remember it, because it's a very important concept, I think.
So what we're saying is we're looking for a sustained trend up or a sustained trend down, and then a retracement, and followed by a perfect ABCD pattern, and exemplified in the New York composite topping in July 3rd is the clearest example to that.
That's awesome. That's perfect. A perfect example of it. Yes.
Hey, real quick, and then I'll let you go. On a side topic, years ago, one of my customers used to call him was a retired SEAL, and I tell you, Larry, and those are some of the most impressive, mentally disciplined individuals you will ever come across in your entire life. This guy, not only that, just an amazing mental toughness, but a physical toughness. And I remember one time I'm sitting in his office, and he was telling me, one of the critical things about a SEAL on their initial training is just teaching yourself to go beyond your limits. And I'm like, well, give me an example. And he goes, well, I can hold my breath for 10 minutes. And I'm like, yeah, right. And he sat there and did it, Larry, for 10 minutes straight. Held his breath.
I watched the Navy SEAL do 50 one-handed push-ups with a 100-pound girl on her back, his back. Yeah, just amazing the stuff that they can do. Oh well, the only thing kept me from being a Navy SEAL is I didn't have the mental ability, nor every time I broke a nail, I would have to go back and get my nails done. So I guess I would not have been a Navy SEAL. I was 4F, so I try to help the servicemen the best I can. By the way, the best way to help servicemen is not through that Wounded Warriors Project, which is total BS. It's through push-ups for charity. These are actual guys that are veterans themselves that are helping other veterans, and it's the best one. 98% of all the money that you give goes to those folks. I think it's with the Wounded Warriors, I think they get 7% of the money that's put in. But push-ups for charity, if you'll look at that, that's the place to give your money, because they give all the money to the soldiers and the veterans, and that's the real key to it, is not too much administrative expenses.
Exactly, so that gets to the people that actually need the help. Yeah, no, I hear you, Larry. I did a tour with the 82nd Airborne Division, but they're pretty tough infantry, but they're the amateur hour compared to SEALs. And so don't misunderstand me on that one. They make us look like a bunch of cowards compared to the SEALs. But at any rate, Larry, thank you so very much for taking my call. I greatly appreciate it.
You bet. Thanks, David, and thanks for your service.
Okay,
we got a caller from Massachusetts. Paul, are you there?
Yes, I am, Larry. How are you?
I'm good. What can I help you with, my friend?
I'm looking at the TZA. I just got out of the TNA this morning, and I'm looking for an entry point for the TZA.
I would be looking to buy it. The 61% retracement of this, we're in a 6-day correction right now, so my guess is it's going to come down to around the somewhere around 1470 to 1425 level. I'd put a little bit on at 1470 and see if it holds. And then, or your second choice is to wait to see if it gets to the 1420 level. Don't add to it. If it goes to 1470, don't add to it if it goes to 1420, because that's the dumbest thing you can do in all of trading is to add to a losing position, because you're increasing your risk exposure, and the market has already told you that your analysis sucks, so you don't want to add to it. So try it at 1470, risk 20 cents. And if you lose, go down to 1420 and try another 20 cents. That's what I would do.
That is excellent advice. Thank you, sir.
Okay, well, that's the one thing I know for sure, is if you add to a losing position, you're breaking all the rules. I have a painting behind me here, an oil painting that was done for me 40 years ago by a very famous artist in California whose husband was my customer, and I had these rules pasted all over my bulletin board, and she turned it into a beautiful painting for me. And number one is never add to a losing position, because you're just you're doing everything wrong. You're increasing your exposure, you're increasing your margin requirements, you are wrong in the market. So you can add to winners, but don't add to losers. That's not a good thing to do. So that much I'm 100% sure of. There's a few things in this business that I'm 100% sure of, and that happens to be one of them. So whether that's going to be the case or not. Do you have any other questions, Paul?
No, I do agree with you there. I've broken that rule before, and it isn't good. Yeah. So I do agree with you.
I tell you, Paul, the number of times I've ever tried it, and I've used to try it more than I don't try it at all now, but when I look at it, I go back and say, my God, it never works. You know, why would anybody even try to think of it? And it's certainly true. That rule was really talked about in Bernard Baruch's book, My Own Story, that you can add to your winners, but don't add to your losers. And Amos Hofstetter at Commodity Corporation was another firm believer. That was one of his number 1 or 2 rules that he had, is to don't add to a losing position, because you're just compounding errors, and you don't want to do that.
Very good. Thank you very much. I appreciate the advice.
Well, thank you for calling in, and just don't add to losers, and you should be okay. Okay, we're having a little bit of a bounce here now in the transportations. I wanted to show you folks this one because it also went down and tested the June lows. We didn't quite get there, but we're having a really strong rally today in the transportations, which we should with the rest of the market going up. And we could get easily another 100 points higher in the transportations based on this rally, because it's going to last somewhere between 2 and 5 days, maybe even longer. Maybe it goes up and makes new highs. It's possible to do that. The Bradley model says that is not going to happen, but there's always that possibility. So you want to look at it, one day at a time. All I know is that when we made those lows the other day, down at that 61% retracement on the New York Stock Exchange Index. That was really important because so many of those things had come in. We had covered this the week before of how important that was, and it stopped right where it should have. So hopefully, you were able to see, some of the things that were there to try to help you, get into your positions or get out of your short positions or add to winners. You'll have to wait and see how that works out. But we're going to take a look here at the gold market here because we talked about silver a little bit earlier, but I wanted to mention gold. Well, I trade gold all the time, and I was fortunate enough to get a little bit short up here on Friday because it was making a perfect 61% retracement, and we've got a chance here for gold to sell off a little bit. But if gold should happen to get above the 1326 level, folks, we could be looking at, and this is related to silver too, because if the silver is actually holding this 618 and just bringing in new short sellers down here, and then it starts to turn, we could see a move in gold of $80 an ounce. That would take us up to almost 1390, which would be equal to the low to the high we made way back on March. Now, that could happen for a lot of different reasons. One would be the, possible war or whatever it's going to be over there, but we'll wait and see. Got to take a little break here. The Dow's still screaming, and we've got the bonds down a little.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, folks, and I'm going to spend the last few minutes here with I think is by far the most important chart that you will see in the next few weeks, months, years. I'm not sure how long it'll be, but it's the New York Stock Exchange index chart. Going back to the first of the year, as you can see, we had that big drop in February, and since that time we went up and we made a 3-drive to a top pattern that finished on July the 3rd. We came down, we made a Gartley pattern that finished on July 23rd. We came down into Thursday, and on Thursday we made a perfect 61% retracement off the April 15th low. But even more importantly in that is that we made a perfect 382 retracement off the low we made back on February 4th. So my analysis of this is that when we go below those lows, if and when we do, that's at around 10,500. We're at 10,750 right now. So if we go below those lows, which is about 300 points in the Dow from where we are now, off the bottom, I believe, that is going to be just incredibly negative, folks, because those are very, very strong cycle points. They're perfect mathematically. The 618 is perfect to within just a few cents, and the 382 is perfect exactly. So this is these are numbers that are really etched in stone from a technical standpoint. I don't know diddly squat about the fundamentals. I don't know anything about any of the the higher level technical things of the oscillators and moving average. I know pattern recognition, and I know cycles, and I know that if we go below those lows, it's going to be really bad. And if we go below there really quickly, like we only rally 2 or 3 days and then go below it, it's going to be even worse. So just keep in mind, it's about 3% from where we are right now. So you figure 3% in the Dow, we're looking at 300 points or so. So if we have a really bad day going below those lows, that's going to be very, very ominous. That's the same thing that happened with the DAX index. It hit 10,000 and it dropped all the way to 9,000 in 1 month, and now it's having a little bit of bounce back. Well, it had that same type of pattern where it held at that 618 and the 786, and then when it broke that, all heck broke loose, and down it came. So I'm trying to say that just be really careful, because if we have just a real dead cat bounce here in this, because the market was very oversold. We've been down 8 days in a row, which that hadn't happened since February, and we still haven't had a 10% correction in the market based on the New York Stock Exchange Index or the S&P 500, and the NASDAQ hasn't corrected at all. So it's it's still bullish, but if we go below those lows, to me that is a real sign that there's trouble in River City, and you want to stand aside and wait and see what happens, because the Bradley model is on track to make lower lows into December. We got some choppiness into early September, mid-August to mid-September, which is actually good, because that should be a beautiful retracement pattern of some kind, and then we'll be able to see if the last leg down into December is going to be a nasty one or not. But so far, it's holding up relatively well. The gold, we mentioned that it needs to hold this level of around 1280 per ounce in the gold, and silver has to hold above the $19.70 per ounce for it to go higher. So these are things we'll cover on the commodity show. We've got the crop report tomorrow for grains, and we'll cover that with Rich on Thursday. So live every day in an attitude of gratitude and do something nice for someone that's a lot less than you.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.